The Middle East is once again a flashpoint for the global economy. There's growing anxiety and uncertainty as tensions between Iran and Israel grow. Some economists say the economic shockwaves are already making their way to South Africa.
All of our, life-serving goods and services, food, wheat, maize, oil and petrol prices, etc., has been financialized, meaning that it's up for speculation on the stock market.
Concerns have been raised that two key shipping routes, the Suez Canal and Strait of Hormuz, could face disruptions. This could lead to higher fuel and food prices. KPMG economist Frank Blackmore says similar patterns were seen during the Russia-Ukraine and Gaza-Israel wars.
And the result will be that depreciation of the exchange rate. And obviously that means then it takes more rands to buy the goods we need from overseas, and that is inflationary.
A recent Fitch Ratings BMI research webinar concluded that while both Israel and Iran will suffer, Tehran will likely feel the economic pressure first. The impacts would be felt globally, especially in emerging economies like South Africa.
The Iranian economy is starting this from a very weak position, double-digit inflation, and not only that, we're talking about 40% inflation, frequent electricity cuts, a broad slowdown in economic activity. So the Iranian economy will be under much more pressure than Israel's economy.
That pressure has already started to show. The rand weakened early on Tuesday as investor nerves kicked in. Oil prices also saw a sharp spike last week after Israel's strike on Iran, jumping by more than 5%, pushing Brent crude to over $73 a barrel. Prices have since started easing again.
Currently, we're only up by around 6% versus pre-strike levels. And it's been interesting to see Brent actually trading downwards today, despite all these attacks that we've seen on Iranian oil and gas infrastructure. And I think that's because of the nature of those attacks and because they were so clearly designed to disrupt the Iranian domestic energy market, but without causing disruptions in international markets.
If more countries like the United States get involved in this conflict, prices could further rise. Back home, the Workers' and Socialist Party is calling on South Africa to cut trade ties with Israel, but Blackmore disagrees. South Africa trades with both Iran and Israel. In March, South Africa exported 10.3 million rand worth of goods to Iran, mostly coal, perfume, plants and surveying tools, while importing less than 2 million rand. With Israel, the trade volume is much bigger, 619 million rand in exports, which includes coal, grapes and diamonds, and 208 million rand in imports.
As the war progresses, to remain outside the war and continue our relations in a neutral stance will be the best for us. I think if you start picking one side or the other, you can get into sort of political retaliation, and I don't think that would be a good way for South Africa to progress at this point.
There is rather a dim light at the end of the Israel-Iran conflict tunnel for South Africa. Blackmore says in uncertain times, the price of gold tends to increase as a hedge, something South Africa can take advantage of to remove some of the economic shock on the domestic economy. For Newsroom Africa on Channel 405, I'm Togozo Khumalo in Johannesburg.